We've been waiting to see just exactly some indication, some firm indication from the government how well has this next phase of the Medibank IPO carried itself. And what's happened is that the government have lifted their indicative price. It was $1.55 to $2. Now it's $2 to $2.30. That's a big jump. It means they know that demand's been very strong and they know the price is going to go up. It also means for ordinary shareholders, they're almost certain, if they get shares in the float, they're almost certain to make a profit if they were to trade on the first day of the float, because the indicative range suggests it's going to float up and probably float up closer to 230.
And that's important because for retail investors, they're not going to pay more than $2, correct?
They can't pay more than $2. That was the cap set by the government. Pretty clever strategy. So it means, I think we could assume a few things. Let's assume that it does come on the boards the first day at 230, even though its issue price was a maximum of 2. It would mean actually that anyone who for every share you purchase, or you successfully garnered through the mechanism of the IPO, that's gone up from $2 to probably $2.30, I would say, thereabouts, or maybe even higher. We don't know yet.
So as time goes on, this indicative range continues to climb. Is there any fear that the IPO could end up being overvalued?
I would take it could be overvalued. How would you know that is the case? On certain metrics, looking at the numbers that we know now, let's say it is 230, the top of the new indicative range. Let's say that's the price. Well, that's a forward ratio of something like 23 times or so for a pretty big company. It's certainly ahead of the forward ratio, price earnings ratio for comparable stocks like NIB. Which is a much smaller company, but it probably have to float higher than that again to get overvalued. What may happen, I think, is there is always excitement around a float, and to some extent that is an artificial excitement because it's mechanically driven and it's created by the investment banks. Then on top of that, when a big company comes into the top 50, it's in the 50, so it must be indexed by the funds. They must buy it whether they like it or not. So you're going to get some energy into that price in the first few weeks. Whether it's overvalued this time next year, we'll know that.
In the case of Medibank Private, are people really pinning their hopes on the fact that it's already pretty well valued at $2.30 and the increased efficiencies from being privatised should see greater earnings over the next 5 years or so?
Well, there should be greater earnings, yes. I mean, Medibank Private, there's a couple of things in how it runs itself. Its margins are lower than its peers. Its expenses are higher than its peers. That would suggest there's the scope there, for instance, to drive the revenues up. The prices it can charge are regulated, so there's limited scope on that side. So it really has to be a matter of cost saving and improving your margins in what is ultimately a relatively slow growth area of our economy's slow growth. It's below trend, so we can't expect it to power ahead like this in perpetuity, but the mechanics which they've designed to get the IPO to work are working. It's unlikely that the stock price would go crazy, but it may well go higher than the new indicative range up to 230.
Now, just finally on that dynamic of retail investors getting a really good deal out of it being capped at $2 for them. Institutional investors, on the other hand, will have to pay whatever the book build price ends up at. Is there any risk for the government of a blowback there in offending institutional investors or upsetting them by having them to pay so much more?
I don't think so. Institutions know what they're up for. They're professional investors. They also have a more accurate picture of the price than the retail investor had prior, because the retail investor phase went first, and to some extent they were bidding in the dark, so they certainly didn't know for sure it was going to be as strong as this. So I think the institutional investors can look after themselves, wouldn't worry about them too much. I think they should be okay. They always have the option of selling later down the track or adjusting their portfolios to that degree. So that's the game they play, and they're being expected to play it by the rules that are set each time in each IPO.
So the government's managed to get dramatic interest in this IPO. Retail investors have managed to get a great deal, and it doesn't seem like there's any real negatives here. Is this just a win-win for all involved? It's
a win-win in the short term. I think that we need to be careful. Obviously, there are other privatizations to come down the line. As you say, you want it to be a nice premium on the first day. If it came on the boards at 230 and we had a retail investment constituency who paid no more than 2, that would be a nice markup for everybody, probably just about what they want.
We'll keep our eyes peeled for that price. James Kirby, thanks very much.
Thanks, Eric.